Mt. Gox creditors aren't selling, the German government is out of Bitcoin, and these altcoins are now safe from the SEC. Could we see a very bullish second half of the year ahead? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications to know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, not financial advice, and wish you the best of luck in your crypto ventures. Bitcoin traders may have finally grown tired of Mt. Gox Bitcoin FUD, with markets barely reacting to a new $3 billion transfer from a Mt. Gox affiliated wallet. On July 30th, Mt. Gox moved around 47,229 Bitcoin to 3 unknown wallets over a 3-hour period, according to Look On Chain. Over the period, Bitcoin stayed above $66,000, but briefly fell into the $65,000 range. At the time of writing, Bitcoin is still trading above $66,000. SwiftX lead market analyst Pav Hundel said that the next few weeks will be very interesting to see unfold, as it seems like the market is taking the news well so far. If you think about the users that were owed Bitcoin from Mt. Gox, these were OG Bitcoiners. These were the people that were buying Bitcoin 5 to 10 years ago that believed in the industry and believed in the asset. Over 41.5%, or 59,000 Bitcoin of the total 141,686 Bitcoin, has been redistributed to creditors of Mt. Gox since July 5th. Crypto analysis firm Glassnode is also under the impression that only a small portion of Mt. Gox creditors are planning to sell, saying creditors opted to receive Bitcoin rather than fiat, and as such, it's relatively likely that only a subset of the distributed coins will be truly sold onto the market. The market has already priced in the fact that these Mt. Gox holders would get their assets back and most likely will not sell. At the same time, we've also received great news that there are altcoins that are now considered safe from the SEC. The SEC has retracted its request to classify the following tokens as securities, including SOL, ADA, BNB, BUSD, Matic, Atom, Sand, Mana, Algo, AXS, and COTI. This is a huge walk back from the SEC and a big win for crypto. So now that Germany has sold all their Bitcoin, Mt. Gox is finally doing the repayments, and the SEC is losing court battles and retracting statements, it looks like we could have a great rest of the year. Fund flows to United States spot Ethereum ETFs have flipped to a daily net positive for the first time since launch day, due mainly to a slowdown in bleeding from the Grayscale Ethereum Trust. Net inflows across all 9 spot Ethereum ETFs came in at $33.6 million on July 30th, according to Farsight Investors. While the figure itself isn't that impressive, it's the first time the funds have registered an inflow outside of its launch day. Around 547 million have left the spot Ether ETF investment products since July 24th. BlackRock's iShare Ethereum Trust made up for the largest inflows on July 30th at $117.9 million. Fidelity's Advantage Ether ETF earned $16.4 million, while the Bitwise Ethereum Fund and Franklin Templeton's Ether ETF earned $3.5 million and $3.7 million, respectively. Grayscale's Ether ETF, meanwhile, saw its smallest day for outflows at just $120.3 million, just a quarter of its outflows on launch day. Just a day earlier, on July 29th, Stoner Research senior analyst Mads Eberhardt said it was likely the massive outflows from Grayscale's ETH ETF would subside this week. In a post on X on July 31st, ETF store president Nate Karasi commented that just in 1 week of trading, BlackRock's iShares Ethereum ETF is already in the top 15 inflows of all ETFs launched this year, and in the top 15 out of about 330 new ETFs. Since its launch on July 23rd, the BlackRock ETH Fund has had $618 million in inflows, making it the industry leader for Ethereum ETFs, in addition to Bitcoin ETFs. On July 29th, BlackRock's ETF and investment chief, Samara Cohen, said that Ethereum ETFs will become part of model portfolios offered by large wirehouses by the end of the year. California's Department of Motor Vehicles is building a DMV-run blockchain on the Avalanche network to streamline vehicle title transfers for the U.S. state's 39 million residents, according to an announcement. The DMV has already successfully digitized 42 million car titles on the Layer 1 blockchain network Avalanche, which will soon be claimable on the DMV's mobile wallet app in minutes using a verifiable credential. Title transfers will be mediated by escrow-like Avalanche blockchain smart contracts that enable users to track and manage vehicle titles digitally, and this could potentially reduce the need for physical trips to the DMV. The DMV's initiative is one of the first implementations of California's broader plan to integrate blockchain solutions into government operations. The state's plan also seeks to improve the regulatory environment for Web3 companies. John Wu, president of Ava Labs, said blockchains are the most advanced tool any organization can leverage to maximize efficiency, maintain compliance, and protect consumer data. The cryptocurrency sector continues to struggle today, July 31st, with its global market cap briefly dipping below the $2.5 trillion mark. Leading digital assets such as Bitcoin and ETH are slightly red for the day, but this is not the case for XRP. The price of Ripple's native token has been on a tear, rising to a 4-month high of almost 66 cents several hours ago. Currently, it trades at around 64 cents, representing a 7% increase in the last 24 hours. XRP's latest pump comes amid rising expectations that the lawsuit between Ripple and the United States SEC might be drawing to a conclusion. The case has been ongoing for almost 3.5 years now, but some experts believe a resolution could be just around the corner. The American attorney Fred Rispoli recently predicted that the entities could shake hands on a mutual agreement on July 31st. XRP's rally also coincides with the SEC's U-turn regarding a complaint against Binance and some of the cryptocurrencies offered on its platform. Previously, the commission had accused Binance of offering and selling Solana, BNB, and Cardano and other third-party crypto asset securities as investment contracts. Crypto market intelligence platform Sentiment also revealed the amount of wallets holding at least 10,000 XRP tokens has exploded to a 6-month high of almost 280,000. The rising number of shark and whale wallets might be interpreted as a sign of confidence and lead to additional market participants entering the ecosystem. At the recent Bitcoin 2024 conference in Nashville, the exSat team unveiled the official launch of its testnet, a significant step forward in enhancing Bitcoin's scalability and interoperability. The exSat testnet extends Bitcoin's capabilities by incorporating a data consensus extension protocol and decentralized indexer, enhancing scalability, security, and interoperability within Bitcoin's ecosystem. This setup supports sophisticated smart contracts and business logic applications across various Layer 2 solutions. It generates a UTXO index for efficient navigation, facilitating the issuance and trading of assets such as ordinals and runes. Additionally, the platform introduces capabilities for UTXO lending and renting, further expanding its utility and flexibility within the Bitcoin ecosystem. exSat utilizes a unique data consensus extension protocol that combines proof of work with proof of stake. This hybrid approach not only maintains Bitcoin's decentralization ethos, but also enhances network security and scalability through stake-based governance.